Hi and welcome to the PlantStock channel. If we haven't met yet, my name is Jesse. Tonight we're going to take a look at an article that was just released that made certain claims to why you should avoid investing into BYND. We then ask the question, is BYND a buy at the moment? Also, we will talk about why the company stock has dropped almost 10% the last week. But before we get to it, I would ask you to please subscribe to the channel if you want to continue to get news and analysis regarding Beyond Meat and other plant-based companies. I would also appreciate an early thumbs up if you find some value in today's video, as it will help the channel reach a larger audience. Thanks, I really appreciate you guys. Let's take a quick look at the stock chart at the moment, ticker symbol BYND. And as we can see at the moment, it's basically plus minus zero here. It's looking a little better than it's done the last couple of days. The last days it's actually gone down about around 8 to 10%. The Motley Fool published an article yesterday with the title, 2 Reasons to Stay Away from Beyond Meat Stock. The content of the article is pretty self-explanatory. The author's first concern is regarding the price that you pay. He states that for Beyond, you get a forward earnings that is 738 times. He compares it to the Tattooed Chef, which is roughly 205 times forward earnings. He also adds, quote, in its most recent quarter, Beyond Meat was severely hurt by pandemic-related restaurant closures. Regardless of this, its retail revenue, which was not impacted, grew by 39% year over year, while the retail-centric Tattooed Chef posted 65% growth in the same period. When considering profitability, Beyond Meat's earnings before interest, taxes, depreciation, and amortization margin was negative 4.5% of revenue, compared to 3.6% for Tattooed Chef. I find it peculiar that he states that Beyond Meat's retail revenue was not impacted by the pandemic. I wonder what he bases that on, considering that in the latest conference call, CEO Ethan Brown stated quite clearly that their retail sales were in fact impacted by Rona situation. Also, it is a peculiar comparison between Tattooed Chef and Beyond. Obviously, a smaller cap company could comparatively have a larger growth as it fills smaller shoes. Beyond Meat has done very well the last couple of years, and every great company will take a beating every now and then and need to recuperate before its next move, especially considering the last year's global situation. The author of the text does his best to try to be nuanced, yet his statement regarding that Tattooed Chef is a close competitor baffles me. First of all, Beyond Meat is a 100% plant-based company and Tattooed Chef is not. Beyond is focusing on the $1.4 trillion meat industry, and the Chef is solely focused on the frozen section industry, which is at $55 billion. Beyond Meat wants to disrupt the animal agriculture industry, making the planet more sustainable. It is one of their most important mission statements. They're not interested in competing with a much smaller frozen food company. And if I understand Ethan Brown whatsoever, I seriously doubt that he would want to. He would more than likely welcome them and hoping they share a common goal. I still believe that Tattooed Chef has huge potential without having to compete with Beyond. In this future prosperous market, there's ample room for both and several others to grow. Guys, let me know down below, what are your opinion on this? Is Tattooed Chef Beyond's competition? This takes us into the article's second argument, the overall competition. The author, like many others, point to the fact that several traditional food companies are joining the plant-based party. Quote, last year, consumer goods behemoth Nestlé launched a rival to Beyond Meat's burger patty using similar pea protein technology. Upon further examination, formidable new competitors such as Tyson Foods, Unilever, and many others have debuted plant-based burgers since Beyond Meat went public. Beyond Meat will certainly not have this promising niche to itself. Furthermore, these deeper-pocketed competitors will have the luxury of already established distribution channels and massive marketing budgets that a younger company like Beyond Meat simply cannot match. Perhaps as a result, new products such as Nestlé's vegan burger patty are hitting grocery shelves with materially lower prices than Beyond Meat. And this is a well-versed idea that has been brought up by many skeptics during the last year. And it is something that we all should be aware of, and it might have a negative impact on the company's stock in the long run. However, I would compare Beyond Meat to Tesla in the automobile industry sector. For several years, all kinds of experts continually stated and argued that Tesla would not stand a chance towards other more established car companies with much deeper pockets. And these other so-called giants in the automobile industry did eventually start to make their own version of EVs and have been doing so for years now. Yet, what have the results been thus far? Tesla is light years ahead of them. Elon Musk never cared about his so-called competition. He just had his mission clear in his head. He was going to disrupt an industry that is part of destroying the sustainability of our fair planet. Ethan Brown shares the same vision, only he focuses on an even worse culprit in regards to sustainability, which is the animal agriculture and meat industry. And yes, at the moment, his company is quite small in comparison to Tyson and Nestlé, but so was Tesla at one point. The difference between Beyond and these other traditional food conglomerates is 1. Beyond has a particular specialized advantage in regards to most of its competition. Making a plant-based meat product that tastes great, similar texture, and that is healthier than traditional meat. And they have been doing this for over a decade now, meaning that they are way ahead of their competition. 2. There is one thing that could be stronger than the pursuit of money and profits, and that is ideology, the ideology of sustaining this planet. Ethan Brown has on several occasions stated that this is Beyond Meat's mission, and people with a clear mission tend to get great results. Hate to say it again, but look at Musk and Tesla. 3. Also, another important goal for the company and Brown is to make their meat alternative cheaper than the actual thing. A lot of resources and R&D is put into making this happen, and it is estimated to be achieved within the next couple of years. Imagine what an easy choice this will be for a larger section of the population. A product that is cheaper, healthier, and better for the planet. And furthermore, Beyond might not have a huge line of products at the moment, but this will more than likely change in the coming years. Imagine all the possibilities when they do move into other food and meat products within a typical store. There still isn't any other company or brand that can mimic chicken in a good way. The closest is Beyond, and that is a product that they are aiming into improving even more. Chicken is a food that most people, here in the West anyway, eat way more of than any typical red meat. So this brings us to the question, is Beyond still a buy today? I think you have your answer. So why is the stock dropping now? There could be many reasons, nothing you should worry about if you're a long-term investor. It could very well be that some investors are worried about the Rona situation worsening, especially after the holidays, since many people still tend to socialize during these days, and that might result in making the situation worse. Also, the stimulus package is still an uncertain prospect and people need their money and might be selling off. It could also be related to what Investopedia refers to the January effect. Quote, the January effect is a perceived seasonal increase in stock price during the month of January. Analysts generally attribute this rally to an increase in buying, which follows the drop in price that typically happens in December when investors engage in tax loss harvesting to offset realized capital gains, prompt a sell-off. I know that there's also some people out there who believe that after this article was released yesterday, that was what basically prompted people selling off. Personally, I don't think that's very likely. This is not a small cap company like the Very Good Food Company or Tattooed Chef. It would more than likely take more than an article like this to move the stock down in this way. So whatever the reason may be, in my opinion, you could use this opportunity to buy more. There will come a time when today's price will be considered low, in my opinion. Guys, I certainly hope you got a lot of value in today's video. And if you did, please smash that like button. And if you want to keep getting news and analysis regarding Beyond Meat and other plant-based stocks, feel free to subscribe. As always, guys, these thoughts and ideas should not be considered financial advice. It's just my own opinions and thoughts. Do with them as you please. Hope to see you soon. Thank you and peace out.